Hello everyone. We are back with another video, and as you can see from the title, this is our first episode, which is a series about the best dividend exchange traded fund. For this episode, we will be diving deeper into QYLD. But before that, let us first identify what an exchange traded fund really is. For those who are not familiar with exchange traded funds, they are basically like a common stock on a stock exchange. The traded price of an ETF changes throughout the day like any other stock, as it is bought and sold on the stock exchange. The trading value of an ETF is based on the net asset value of the underlying stocks that an ETF represents. For this series, we will focus on dividend investing, and we will cover the best dividend ETF investments as of this month. Without further ado, let's get right into it. All throughout the video, we will be diving deeper into QYLD. Over the past 10 months, QYLD's net assets have increased from $3.81 billion to $6.62 billion as investors have piled their money into this ETF for monthly income. Now, isn't that such a huge leap from the previous one? It increased by at least half of its value over the past 10 months. That's crazy. No wonder investors are stacking up to sign up under them. If you are not familiar with the global Nasdaq 100 covered call ETF, its distribution yield varies. Its current yield is 13.18%. Indeed, you heard me correctly. QYLD and the other Global X covered call funds have been debated on seeking alpha, and some investors love them while others prefer to stay away. One of the largest cases about how QYLD would perform in a bear market has now been discredited, but this fund is not the best choice for every investor or investment style. I will go through the math and why QYLD is an interesting fund for income-oriented investors, but please be honest with your expectations from QYLD. I want to make it clear here, if you are not looking for an income-generating asset, QYLD is not an investment that will satisfy your investment strategy. QYLD has become a very popular fund among income-oriented investors, but if capital appreciation is what you're seeking, QYLD will only take you so far in the traditional sense. While nothing is impossible, there is a very strong probability that QYLD will not outperform an S&P 500 index fund or a total market fund on a per-share basis. Over the past year, QYLD's net assets have grown from $3.81 billion to $6.62 billion. Since August of 2021, the Invesco QQQ ETF has declined by 17.3%, falling from $368.05 to $301.94. QYLD's net assets have not increased by $2.81 billion, 73.8%, because of capital appreciation in the markets. More investors are allocating capital to QYLD as the monthly distributions continue to be paid, and its yield is consistently in the double digits. Investors have been in a yield-starved environment where there have been limited opportunities to generate large amounts of yield. While QYLD is not the perfect investment, what really is it? The facts are that QYLD delivers on its main objective of generating large amounts of income for its investors, and that QYLD has not been the train wreck many have argued it would be during a bear market. As of September 2022, QYLD has a dividend yield of 15.88% and paid $2.64 per share in the past year. The dividend is paid every month, and the last ex-dividend date was August 22, 2022. Under the QYLD holdings, their highest sector allocation is, of course, technology, which has a 63.8%, while consumer services are 18.29%, and consumer goods at about 10.76%. These three are currently the top allocations in terms of QYLD holdings. Under the category of allocations, here we have the top three companies that are currently functioning under QYLD holdings. The first biggest company that has the most percentage of QYLD holdings is Apple Incorporated, with a total of 14.5% net assets. Followed by another tech company, we have Microsoft Corporation, with an 11.57% total net asset. Third on the list is a really big company that falls under consumer services and goods, and that is, you guessed it right, Amazon Inc., with 7.57% of the total net asset. Considering all the companies that are under, you wouldn't be surprised by how big the companies are under QYLD holdings, right? Because in the first place, knowing how much its yield has increased for the past year, no wonder big companies like these started investing in QYLD. Since QYLD's inception at the end of 2013, it has not missed a monthly distribution to its investors. QYLD develops its distributable income by selling monthly at the money-covered calls against its respective index, which is backed by the holdings within its fund. QYLD is not obligated to dividend farming, trading, or capital appreciation to generate its distributable income. If companies slash or cut their dividends, QYLD's distribution is not affected. These are some of the reasons why income investors have parked capital into QYLD. Income investing is much different than looking for investments for capital appreciation. Income investors have a primary goal of rendering a stream of income nonetheless if they are taking the income as cash to live on or reinvesting it to grow their future income stream. Since QYLD is an income-producing asset, I want to treat it as one and see if it lives up to its reputation. QYLD is not for everyone, and unless you are an income investor, it does not make a lot of sense. From an income perspective, QYLD is an outstanding investment. Since its inception, QYLD has had an annualized yield of 9.48% and has outpaced inflation yearly. The major bear thesis has been debunked as QYLD has declined less than the Nasdaq and QQQ during the bear market. QYLD has never missed a monthly distribution, and since its inception, each share has generated $19.90 in income through 100 monthly distributions. QYLD is not a yield trap, and as long as you are okay with the fact that shares of QYLD will follow the markets, its monthly income should be quite enticing for any income investor. Barbell Capital has provided investors with a comprehensive strategy and approach that utilizes growth, value, dividends, and options for income to generate money in your portfolio while mitigating downside risk. Within Barbell Capital, you will find exclusive research, model portfolios, investment tools, Q&A sessions, watch lists, and additional features for its members. There is also a live portfolio dedicated to generating capital from trading, selling puts, and selling covered calls. The profits will be allocated to future capital appreciating investments and investing in dividend investments to generate income while we doze off. Now, as we reach the QYLD peak, let us now summarize all that we have discussed. Over the past year, QYLD's net assets have grown from $3.81 billion to $6.62 billion as investors have stacked up into this ETF for monthly income. Also, one of the major bear cases regarding how QYLD would perform in a bear market has been debunked as its decline less than the Nasdaq and less than QQQ. Moreover, QYLD has paid 100 consecutive monthly distributions since its inception. Since its inception at the end of 2013, QYLD has paid $19.90 per share in distributions and has an annualized yield of 9.48% since it went public at $25 per share. QYLD has a dividend yield of 15.88% and paid $2.64 per share in the past year. The dividend is paid every month, and the last ex-dividend date was August 22, 2022. In conclusion, QYLD is an incredible ETF you can invest in. Observing its growth throughout the years, and how its current yield has reached this point. No doubt, big companies such as Apple and Microsoft are included in their holdings. With that, we hope you learned a lot more about ETF QYLD. Make sure to support this channel by giving our videos a like and subscribe for more.